Wealth Our Way Wednesdays, 12:30 p.m. 15 minutes of finance. What do you do when you're starting from the mud with less than zero? No plan, no role model, no hero. Take to the streets, bring heat like De Niro, or tune in to Wild, the network, the thorough. If it was me, I'd sit down with a pad and a pen, hit my homie Shitty's thoughts with a friend. Tank is spitting real knowledge from beginning to end. 15 minutes, Wealth Our Way, let the lesson begin. Yeah, 15 minutes of finance with your man, Big Tank. Let's get it.
Well, that was embarrassing. Thank God you have a producer who can tell you when you are on mute. So I've been talking to you cats for a whole minute and you didn't hear me. Let me start over again. Thank you, everybody, for joining us here at Wild Wednesday for another episode of 15 Minutes of Finance. We are on episode 220, 3 signs that the economy is improving. And it's great to get some good news for a change, because for the last year, we've been hearing nothing but doom and gloom about recession, post-pandemic recovery, everything, inflation, BRICS. If it was bad news, we've been hearing it financially. I just, an effort to pat myself on the back. I have constantly been trying to explain to people, this gray hair is here for a reason. 25 plus years in this industry, everything is cyclical. Bad times don't last, good times don't last. Budgets, dollar cost averaging, asset allocation, great strategies last. So today I'm gonna spread some good news, but Lord knows when the next bad news batch will come. Before we get started with anything though, we open the show every week with go or no go. So let's talk about this week's go or no go. I received an email from a young lady. Basically, she said to me, Tank, and I'm going off the dome. I'm not gonna read the email. She said, Tank, I have a job. I don't have a career. I have a job. It pays the bills, but my quality of life is not where I want it to be. I keep hearing, I'm a freelance journalist, but I keep hearing all of these things about how people are making money doing gig work through Fiverr and other sites, or just consulting and contracting their freelance journalist experiences, which is actually, this is why I believe in God, and I say God always is working. I just finished listening to, for the third time, one of my favorite books called Epic Content Marketing by Joe Pulizzi. It's about changing your sales approach as a company to being more informative and educational, like we try to do here at 15 Minutes of Finance, instead of being so sales driven. And it's talking about how companies that sell products and services actually need to start to model themselves as media companies and get information out, which is opening up a whole new business realm for journalists. So instead of writing for a newspaper or a magazine, getting on companies' websites and helping their content actually look like good written content. So it really went home with me quickly that this young lady is talking about expanding out of her current role into an entrepreneurial role as a journalist, because there's opportunities everywhere. But the heart of her question was, I keep hearing how bad the economy is today. Is this a good time to venture out into the world of being an entrepreneur? So my answer is, you asked a pro entrepreneur dude, should you become an entrepreneur today? So my answer is going to be yes, go. And here's why it's going to be go. Being an entrepreneur has been one of the greatest decisions I've made in my life, probably right next to being a dad. I love being a dad. Happy Father's Day belated to all the dads. I didn't make that decision, but that's an argument for another time. In any event, the reality is that I chose to be an entrepreneur for one reason and one reason only. Big Tank don't like rules. I don't like constraints. I don't like boxes to fit in. I'm a big dude, need my space. I had no idea about the money I would make being an entrepreneur. I also had no idea about the risks I was taking, the hard times, the responsibility. All I knew is that I wanted to march to my own drum. Economies as I started to show out, they go up and down. They're bad, they're good. That's not really where you should focus your attention. What you should focus your attention is what it is that you need. You make a budget. What do you need to survive on a daily basis? Research your market. See what people are getting paid for what it is that you do. Find what you are hyperly good at inside of a particular market. Make a niche for yourself. So that niche that you make for yourself will allow you to differentiate yourself from everybody who looks similar to you. When you go out, you know, I'm a guy. I go out, a bunch of guys at the bar, at the club, at the restaurant, at the movie theater, whatever. We all look the same. We're all men. You know, I say hello. I give a smile. I answer conversation. I start to differentiate myself by how I am individually, not what you see as my overall far-arching, you know, avatar, as they say. So I say pursue being an entrepreneur. Find resources online. I love what she said about Fiverr. You know, as y'all saw my rap intro, I fancy myself to be a part-time a rapper, a non-professional rapper. People are making so much money on Fiverr writing raps for people. You want to write a rap to your girlfriend on Valentine's Day? You go on Fiverr, pay somebody $25. They make a personalized rap. There are cats doing hundreds of these a month, just, you know, $2,500, $3,000 a month, doing something that they love and enjoy as a side business. So, and I'll double back to that at the end. But with that, it's a go. Step out there, become an entrepreneur, pursue your freelance journalist desires, and good luck moving forward. Let me know later on how that turns out. So let's talk about the heart of what we're here to talk about today, to show 3 signs that the economy is improving. I did a show maybe 2 years ago talking about the difference between lagging economic indicators and forward or predicting economic indicators. Little brief 101 on what that means. There are some things that will tell you that the economy has improved by measuring things after they've occurred. And then there are some things that will tell you the economy should improve because these things are improving. One of the things that we look at, just to give you an example of one, are housing starts. Housing starts are what we call when new construction is going up. Housing starts are an indicator that the economy is about to get better. When people are building more houses, they feel strong enough. There's not a builder out there that uses their own money to build new construction. Toll Brothers, all of these other different, I can't think of half of the big construction companies, but they don't use their own money. They borrow money or they get investors. They only do that when they feel comfortable that the economy is strengthening to a point where they're going to make their money. So we look at housing starts as a leading economic indicator. Let's talk about the 3 economic indicators, and I'm not going to identify whether they are leading or lagging, not important, and you can Google it. I'm going to talk about the 3 economic indicators that show me that the economy is improving. 1, the Federal Reserve. So we have all heard about the Federal Reserve, how they've been raising interest rates. They raise interest rates to make the economy kind of slow down a little bit. You know, when you raise interest rates, the cost of capital goes up. When the cost of capital goes up, you're more likely to not start new projects because it costs too much to start them. So also, if you think about it in its very simplest of terms, if you can invest $1 in a stock market, which is up and down and has some risk, or you can put $1 in the bank that's guaranteed and safe. We'll talk about that another talk show. The only incentive you have to go after the riskier money is that it pays you more. Well, when I start raising the rates of the safe investment, it makes you scratch your head and say, well, I could just put $1 in a savings account and earn 5% guaranteed versus putting it in the stock market and maybe getting 10%. So there's something called the risk-adjusted rate. And right now they are making the risk-adjusted rate need to be very high to outperform savings accounts. So raising the rates shows that we need to fix the economy. Well, the Fed just did in their last meeting was they didn't raise the rate. That makes us all think they must think things are working and getting better. The second thing is unemployment rates. Unemployment rates today are back to where they were pre-pandemic. So let me look at my notes for a minute. The unemployment rate in America in February of 2020 was 3.5%. During the pandemic's earliest months, from April 2020 to June 2020, we had double-digit unemployment. Now, as of the May unemployment numbers, we are down to 3.7%. We are back to pre-pandemic levels. When unemployment is low, People are working. When people are working, they're making more money. When people make more money, they spend more money or save and invest more money. Makes the economy more robust. The last indicator is the S&P 500, the big stock market. What is it doing? Remember we were talking about recession, the market was going down, you couldn't make any money. Well, year to date, from January 1 through yesterday, the stock market is up 14.18%. Now, I tell you guys all the time, I sound like a broken record. It normally averages 10% a year. That's what it's averaged for the last 100 and some years. So to be up 14.18 means that it's doing very well in the first half of this year. If you go back a whole year, it's up 15.97% for the last 12 months. Market is doing well. So these are indicators that the economy is getting better and we can come outside and not be so scared. How do we take advantage of that? Well, let your boy Big Tank give you 3 tips. The first tip on what you should do now that the economy is getting better is revisit your asset allocation. Asset allocation we talked about before, how much money we put in stocks, how much we put in bonds, how much we put in cash. For the last decade and a half, putting money in cash has been not a desirable idea because rates were under 0.5%. So people were driving their money into stocks and bonds to get better returns. Well, when you drive your money into stocks and bonds, you're taking more risk. Now is the time to re-examine your asset allocation, lower your risk profile by diversifying back into cash that is paying good money right now. Speaking of cash paying good money, tip 2, take advantage of high savings rates. Not to advertise for a particular bank because I don't get paid by anybody, but I just opened a Citizens Access Savings account, money market account. I'm getting over 4.25% on my money. I'm putting, I think, $300 a month in there, and I moved $5,000 to start. And I'm already seeing my interest payments. It's ridiculous. I love it. I have a couple of other high yield savings accounts and high yield money market accounts at PenFed and a couple of other organizations. SoFi. I challenge you to go out here and find yourself the high yield accounts to make the cash portion of your portfolio work best for you. Tip 3 goes back to the go or no go. Now is the time, with unemployment getting lower, for you to start to look at new career opportunities. Yes, when unemployment is high, it's a great time to go look for a job because clearly there are a lot of people out of work. So you can look at that one of 2 ways. I got more competition than people looking for jobs, or there are more jobs to fill because people are unemployed, so I should look. Conversely, when unemployment is low, you also have a good opportunity to go look for jobs because you know you can get any type of job. If the one you're desiring falls through, everybody's hiring, jobs are available, unemployment is low. Now is the time to take the risk. So it's amazing how quickly 13 and a half minutes pass, especially when you spent the first 47 seconds talking to yourself because you were on mute. But we are at the end of today's program. I want to thank each and every one of you for joining us. We will be back here next Wednesday with 15 minutes of finance and also with the Financial Power Hour next Wednesday. With that being said, talk to y'all next week. Remember, wealth is not only for the wealthy.
Thanks for tuning in to the Wild Network. For more great content like this, be sure to subscribe to our YouTube page at Wealth Our Way Network. Also, don't forget to follow us on IG and Facebook. Remember, wealth is not only for the wealthy.